Hi, welcome to this video today, which is all about the best hedge fund traders and learning from them, and learning from probably one of the greatest hedge funds of all time. Now, the hedge fund was the quantum fund. The traders are George Soros, Stanley Druckenmiller, and Jim Rogers. Now, we've done videos on all those traders and also on the quantum fund, but this video is slightly different. It actually comes from a member of our Facebook group. I'm just going to show it to you after I've finished speaking. Now, the reason I want to show it is because he was interviewing Jim Rogers and he came across one of our videos discussing the quantum fund. So he critiques it. So he basically takes out the key points that we made in relation to why the traders were so successful and the fund made so much money. And he also puts in some key points which I actually forgot to put in the original video. Now you can join Chris's channel on the link beneath this video if you wish to, and you're a trader, a lot of great info. You can also join our Facebook group if you're a beginner or a more experienced trader. Doesn't matter, it's a very friendly, helpful community with a lot of great ideas being posted. Right, now I've done the intro, let's go and check out the video.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today a quick video about the Quantum Fund. I actually had the pleasure of interviewing Jim Rogers the other night, which was quite a treat, and we'll have that interview for you shortly. Although in doing some research and just reviewing the Quantum Fund, obviously, which George Soros was involved in as well, found a really interesting video here. We'll link to that below. George Soros trading techniques, learning from the Quantum Fund. The fellow in this video, I've been unable to find his name so far, although it looks like he's from Learn Currency Trading Online. And in either case, had a lot of interesting comments. Perhaps one of the things that really stuck out to me was just looking at his collections of books in the background. He's got some Jack Schwager books, which I've loved. I see he's reading Plato and philosophy, so really intelligent guy. And a few of the things that he mentioned that were successful about the Quantum Fund that, in my experience, again, my background was as an equity options trader before getting into Austrian economics and gold and silver. But a lot of what he mentions, I really agree with. So one of the things he talked about was looking for trading opportunities anywhere. Again, a lot of people get focused on a particular market, which certainly, as Jim Rogers talks about, there's a lot of value in trading in and investing in what you know. And I think that makes a lot of sense. Yet that doesn't mean you just have to trade tech stocks or foreign currencies. In fact, one of the things that I find really fun and enjoyable about the markets is you can do your research, see what makes sense, and then there's all sorts of different tools that you can use to express your bet or your opinion in different ways. So again, while staying within what you know, but also having the freedom to not limit yourself just to one asset class, because different opportunities will appear at different times. And another thing that he mentioned was how with the Quantum Fund, they lost on many of their trades. It might have been even a majority of the trades they lost on, but one of the things Soros mentioned was how I'm okay with having the losers. The key is to recognize when I'm wrong and get out of those trades, whereas when you see an opportunity that is really good, then that's time to be more aggressive. Certainly matches, again, my trading firm was called is still called Susquehanna. Great traders, and certainly the approach we were trained on was that, you know, you're looking for the single, you're not always looking for the home run, yet when that comes, there are times to be aggressive and really, as he said, the courage to gear up the big trades, which if you play poker at all, you know, there's some situations where you bet a smaller amount. And then there's some situations where you are prepared to go all in because the odds are in your favor. And again, I think that certainly holds true for the financial markets as well. He also mentioned don't trade too much, which I think is a great one, where just because the markets are open doesn't mean you have to be throwing money around. It's okay to wait. Right now we have the stock bubble on the brink here in the US. You know, if you have a strong opinion on it, by all means, go ahead and trade it. If you're unsure, well, maybe the Fed's going to stop raising interest rates and put more money into the system. Okay, there's a lot of ways to look at something, and you don't have to trade every situation, but if you just keep researching and learning, and then maybe one day you see, all right, now I have this strong opinion, this is where I really want to allocate my capital, and do it when the odds are in your favor, is really a great strategy to keep in mind. And perhaps the last note, this was a great story he told in this video here, which again, I really recommend watching. Hopefully I'll be able to get him on my Inside the Markets show, because he seemed like a really intelligent fella. But he tells this story about Stanley Druckenmiller and George Soros when they were betting against the British pound. And Soros asked Druckenmiller, how big is your position? Druckenmiller says, I have a position of about $1 billion. And Soros says, you call that a position? So again, some of the fun things about hearing when billions of dollars are being moved around. Yet from a trading standpoint, one of the things I really learned during my trading career is, again, you want to learn what you're doing, but when you get to the point where you feel comfortable, not want to treat them like they're just numbers, but in a sense they are. So if you really see a spot where there's a great opportunity, there are times where, yes, you do want to trade bigger. Again, like I said before, if there's, you know, it's not as certain or the odds aren't quite as in your favor, you can vary your bet size. But again, I thought it was interesting. He has $1 billion on, and Soros is saying, essentially, if you really know the trade and you know it, don't be shy about doing it. Again, use that advice judiciously. Again, you don't want to hammer everything, but when there are those times to go in big, that is really how you can come out ahead in the long run and not even have to win on the majority of your trades, but just using the odds in your favor can be a great formula for long-term success. So with that said, I'll stop now and go watch the video. I think you'll really enjoy it. Leave your comments below. I love talking trading, so any thoughts you have, I'll be happy to comment on those. And with that said, thanks again for watching, and I will talk to you again soon.